Let's talk about all things oil with the new CEO of Liberty Energy, Ron Gusek. He has just rang the opening bell at the New York Stock Exchange and took over from CEO Chris Wright, who is now, of course, the U.S. Secretary of Energy. So, Ron, it's a great pleasure to have you on Power Lunch. I think the same question I posed to now Secretary Wright, I will ask you, which is at 13.2, 13.3 million barrels per day, how much more oil can the United States realistically produce?
Yeah, obviously, I think we work in a world where we've got a commodity driven by supply and demand. The opportunity's there to produce more, but there has to be a price signal to support that. The businesses that are out drilling for oil every day are going to make a decision to increase that activity based on the opportunity to earn a return on that investment. And so to the extent the price of the commodity supports that, we're going to see some growth there. I think we have an administration now that's working hard to support that. They're trying to remove some of the impediments that we have seen. Think things like permitting, infrastructure, LNG export, all things like that are going to help support those decisions made by our customers.
Yeah, whether we go to 13.5 or 13.2, Ron, okay, a marginal gain. Are we able to add, we still import, 6 million barrels of oil per day. Can we add another million barrels a day or whatever profitably here in the United States?
I think that could certainly be done. I don't know that that's going to be the case. I don't know that we expect to see growth of that kind of scale. We've heard most of the larger E&Ps talk about very modest production growth, maybe a few percent on an annual basis, and in some cases even flat. But again, that's a function of, I think, where they have choices to deploy capital today. And so if we continue to make the United States an attractive place to deploy capital, to spend those dollars to drill for oil, then I think we could take another leg up if that was necessary to meet the demands of the global oil market.
Ron, it's Kelly here, and again, welcome and congrats. And I understand you rang the bell today and everything, so kicking off with quite a bang here. And speaking of which, what do you think when you hear sort of Secretary Besson, as he reiterated today, saying, yields will come down as the price of oil continues to decline, as the price of energy continues to decline in this country? It's a great message maybe for us consumers to hear, but is it a great message for you as a producer to hear?
Look, I think for us, it's incumbent upon us to find ways to lower the cost of producing a barrel of oil or an MCF of gas that allows us to be competitive on the global stage. You've seen tremendous efficiency gains from the industry. It's an industry I would never bet against. There are a lot of smart women and men that work here, and we continue to find ways to make bringing a barrel of oil to the surface or producing an MCF of gas lower and lower. The administration supporting that through some of the actions that they are taking now. And then it's incumbent upon us as the companies working in this space to continue to find ways to do the same so that we can be an active contributor in the global market.
I'm going to not ask you to talk about your company, but talk about your home country of Canada, Ron. You went to the University of Alberta. You just heard our discussion, I'm sure, about tariffs on Venezuela. Obviously, so much has been made about our friends up north, the potential tariffs there. This is potentially a 25% tariff on countries that buy from Venezuela. So that could include China. So that's a big issue. But you heard my take about this potentially benefiting Canadian oil because it competes in large part with Venezuelan oil. Was there anything to that? Do you think this could actually be sort of an olive branch to Canada?
There's certainly something to be said for that, I think. We have, of course, a meaningful amount of trade, particularly in hydrocarbons between Canada and the U.S. Our refining capacity here in the U.S. relies on some amount of heavy input. And as you correctly noted, there are a few places that can come from. One of those is Venezuela, and Trump has been very clear, I think, about some thoughts there. And an alternative to that is Canada. We produce a lot of heavy oil north of the 49th, and the U.S. market is an important market for that product. So to the extent we have maybe a discouraging message around importing Venezuelan crude, that's certainly, I would view it as positive for the Canadian market and the companies up there that are producing heavy oil.